Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Rayne Steinberg, CEO of Arca, to discuss how ESG should be approached in the digital asset space. Rayne, as you know, one of my favorite topics. Great to see you again. Welcome back to Trade Talks.
Thanks, Jill. Great to be here.
The overwhelming amount of passion and dollars surrounding sustainable investing, coupled with the widely divergent nature of partisan camps, motivated us to pause, ponder, and probe. What is the cause of this attention that we're seeing with ESG?
Well, there's a tremendous amount of interest in ESG as an investing style. As you know, it's grown 42% from 2018 to 2020, one of the really highest growth areas. But it's especially interesting as it relates to digital assets, which we do at Arca, where there's a huge social impact component of what we do, but not necessarily what people think. There's been a lot of focus on the E part there, but not so much on the S and the G.
Rayne, let me ask you this as it relates to the equity asset class before we get to digital assets. Do you think there's too much greenwashing taking place? How does this impact the ability for corporate management teams to execute on strategy when everything is being labeled as part of an ESG strategy?
Sure. There probably is. It's really hard to quantify. But as we know in asset management, once they identify a hot trend, all of a sudden, there's a tremendous amount of product addressing that. The SEC has actually come out and given a directive. If you are going to label a asset class or a style ESG, you're actually going to have to define what that means on an environmental, social, and governance impact. So you can't just label things ESG. And the reason this is important is people really want their investing dollar to have an impactful meaning, not just to check a box for ESG. So that's why it's so important that these things actually align with what they are.
And going back to digital assets, how does ESG relate to there? What issues are investors focused on?
Sure. Here's an area where the investors are focused very much on the E in ESG as regards to digital assets, specifically the environmental impact of Bitcoin mining. So how much energy is used Bitcoin mining? The interesting thing is that this is really one of the least important aspects as far as digital assets go. Digital assets, as you know, blockchain is really a system for distributed governance with broad societal implications. So the energy impact is really a tertiary type result, but because of people like Elon Musk, who have focused the narrative on energy consumption, that's where the public is looking.
And even though the public is really obsessed with the environmental part of it, why do you think governance should really be the focus? I mean, the obvious thing that you said is that it democratizes finance for all when you look at it through the DeFi lens, but there's another number of reasons as well.
Sure. So when you talk about distributed systems, this is what Bitcoin specifically and blockchain generally was designed to address. So coming out of the financial crisis, we identified a bunch of things that had problems with concentrations of power and concentrations in decision making. So blockchain is an incredible way for huge decentralized decision making. So these are people all over the world, and you're not necessarily concentrating it in the hands of any one person. And then you brought up, the access to capital, the decentralization of finance, the lowering of costs. These are all things that are going to drive, broader societal goals that are very important, that are driven forward by really governance issues. And if you take it back to the E portion, it's hard to say what is the value of the energy that's taken. So absolutely, Bitcoin uses a lot of energy just on an absolute basis. But if it's displacing a huge and inefficient financial system in a more efficient way, perhaps that's a good use of energy. So these are very nuanced discussions.
What about the social factors?
I mean, when you talk about the social factors, that's the real, when we talk about impact investing, it's really how does it impact our society? So when we talk about, fees based that really the less fortunate pay. So, developing nations, remittance fees, they bear some of the highest fees in the financial service business. Blockchain looks to address that. When you talk about aligning incentives, things like equity valuation. So the launch of DoorDash, who made money in DoorDash? Venture capitalists, early founders. Who makes DoorDash possible? The people that cook and deliver food. Blockchain actually allows you to align those incentives through a token where the value would accrue to the people that make systems valuable. So this is a real way to level the playing field.
I would also argue in the digital asset space, when we think about diversity of the workforce, it certainly is more diverse than traditional capital market spaces that we've seen. Certainly the younger generation, that is a priority for them once they're looking to onboard to a company. So I think you could also wrap that in the governance umbrella too.
Sure, governance and diversity. There are no barriers to entry in digital assets, and it really is a younger person's playground. So we're seeing people that wouldn't necessarily be going into financial services showing up in digital assets, which is great news for all of us.
All right, Rayne, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill. Have a great day.